All right, everybody. I'm going to try to do daily turning point reviews, and basically, it's just a turning point um, on different markets, and just review them on a daily basis to show how how the turning points are occurring and setting up the trades. The first thing to note, I've already went in the prior videos, is that you have turning points, and you can use signals to help your judgment, meaning signals take a backseat to your judgment because signals will always have noise, and you don't know if the signal is right, which signal is noise and which signal is the real signal. But the judgment, for some reason, you're able to decipher it because it's able to weigh different things and is not contained in rigid rules. And what I mean by that is you could have a signal that meets all 10 conditions and one that meets only 8 conditions. But the one that meets 8 conditions is the signal that works, and the one that meets 10 conditions is the one that doesn't work. So the markets are always dynamic in that way, otherwise they would be gamed. You'd figure out the quote-unquote formula, right? Now here's the genius of this. Even though the manifestation of supply and demand is always different in every trend, the underlying principles are the same. That's the amazing thing. And I'll show that. I try to catch them with signals, but it's impossible. And it only captures some of them, and the other ones you just have to use judgment and be ready for them. How do you do it? Just mark your levels and expect them in advance, and you'll see that they occur. So let's just delete all this and go over. All right. Now remember, the ES is in a downtrend. In a downtrend, any downtrend, you do not trade bullish change of behavior. You only trade bullish change of behavior in uptrends and in sideways trends. Similarly, a bearish change of behavior, you only trade it in downtrends and in sideways trends. You do not trade it in strong uptrends. Why? A bullish change of behavior in a downtrend is actually a pullback on a higher time frame that gets sold. Again, a bullish change of behavior in a downtrend is a bear pullback. It's going to get sold. All right, and this is an example. So let's just go over the turning points. First, I'll mark the left-hand sides. All right, now what do we see here? We see a bullish change of behavior, pullback, springboard, markup. It goes only to resistance. Why? Why doesn't it continue to mark up? Because this is a pullback to be sold. Bullish change of behavior is a pullback to be sold in downtrends and will not yield massive markup. It will only yield a little bit, which will just be a pullback on a higher time frame that gets sold. Here's the example of that. But on the other hand, the bear move right here, what you see is 3,000, 1,000, 3,000, 4,000, 8,000, 15,000, 8,000, 19,000. What is that? That is your bearish change of behavior. Why doesn't the signal catch it? Because it doesn't fit all the rules. So you have to use judgment, right? What didn't it fit? I mean, the volume was the biggest volume in the last 8 waves, but it just didn't. It wasn't big enough in terms of a price distance move. Only the volume was big, but the price move, as you can see, is not a big wave, right? Second thing to note is once you have a change of behavior, right, from the perspective of volume alone, it's definitely a change of behavior. You're looking for that springboard, which is your low volume pullback, and you find that where? Right here. How do you know? 19,000 to 4,000. Basically, the springboard should be 1/3 or less. I prefer 1/4 or less, but the minimum is 1/3 or less in terms of volume. this fits that criteria. In fact, it's less than a third, it's less than a fourth. Right, so then you have that, and then finally you have the breakout, which is right there. That breakout is the first breakout, and that is your markdown bar right there, which initiates markdown. See? So that's done. The third turning point, remember the first turning point here, set up the bear pullback, which was sold. This turning point here, set up the bear rally. The turning points that set up the rallies with trend have a lot of reward. The counter trend, which set up the pullbacks, have very little reward. As you know, the rallies are always bigger than the pullbacks. So you just have to know, you have to know that. All right, since we're in a bear trend, we'll look for one more. Here you go. Right there, you had selling on the change of behavior, springboard, market is ready, markdown bar, initiates markdown, goes here. How do you know where it's going to go? It's going to swipe this low, and more importantly, swipe this low. Why? Because the stops are there. How do you know? Because these ones were already taken. Next target is here. Why is it going there? Because they have stops. Those stops are needed to cover the short positions. The shorts were taken. They need buys. So it's here's the sell. The sells need to buy. Buyers need sellers. So over here you have the exits, right? Longs will sell out of their positions under this low, and these guys will be able to cover against those sells. Anyway, you get the idea. Basically, they need to match. So it's going to take this low and then bounce. It would have gone higher if it wasn't, it was already taken. So this is the next logical place for the position to be covered. It has to take this low. That's where the stops are. Anyway, so that is that turning point. The rest is shit in the middle. Then you have this other turning point that goes up here. Then you have this third turning point here, with the springboard, and it goes down. And here you have another turning point that sets it up. This is, I don't know what this is, clear or not yet, but I don't know what this is. You see on this 3 hour, it's all red, 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 red. Do not get into bull turning points, because they're going to have very little reward, and they'll set up the pullback to get sold. Some of them might set up a bigger bounce, but it's not worth it. All right, so I'm done with the ES. Let's take a look at the turning points in crude. So first things to note, the trend, this itself on the 3 hour was a turn. See this? Biggest in 8 waves, followed by low volume pullback. What does that mean? That means strength plus weakness equals direction, and it's going up. I don't know how long it will go and all that, but I know that the direction is up. After that, you have a breakout here, so test the breakout. On the test of the breakout, you have the biggest in 5 waves. I usually pick 2. And then it goes up. You had the 6,000 and 2,000, and this is on a test of a breakout. The volume comes in and then it goes, right? remember, one other thing is the genius of the market is that it has constant variability. So even though the principles are the same, the manifestation of those principles are always different in terms of the amount of volume, in terms of the price distance, and how it forms. Number of candles and all of that, the time it takes, the highs and the lows, all of that. So this is one turning point. And the other thing is you won't be able to see the bear turning point up here unless you change the retrace. So when I change the retrace, I can see that this was a turning point because you have a change of behavior, a springboard, and a markdown bar. But do you know how low it'll go? You don't know. In this case, it went all the way down here. Why? Because in the higher time frame, that was the creek, the test of the breakout level. And that's why I went there. Then the buyers came in, which is where they're supposed to come in. And they went up and they took out the high because this is the turning point that is creating that rally. There's one other thing I'm going to talk about, why this turning point was highly likely. If you notice the wave volumes, right? Are they increasing or decreasing? They're stair-stepping down. 15,000, 3,000, 2,000, 1,000. Test, test, test. Nothing there. Followed by 6,000. 6,000 is 6 times the last down wave. So buyers came in due to the weakness of the sellers and the lack of selling at this creek area. Sellers don't want to sell that creek that tested the breakout. So the buyers came in, and then you had a low volume pullback, 6,000 up, 2,000 down, low volume pullback, and that set up the move, the turn. All right. Over here, you had another turning point, which is the 4,000 down and only 1,000 up on the springboard, followed by the break, which is setting up the down move. There was one other one that was really nice, and that's right here when it went down on 31,000. Set up the springboard, wait for it, wait for it, wait for it, and bang, right there. It's also 6,000. It's also, there's actually two. Low volume, low volume. Relative 31,000, right? Then it comes up on 21,000, and finally volume shrinks here, here, and here. But that's not enough. You need a break, and that break you get, the initial one you get right there. And the second one is the coffin, the nail in the coffin right here. It's pretty big. And then it goes down. Where is it going to go? It's going to take liquidity. Where is the liquidity? Somewhere under this level. That's the first area to go. Why? Loans will sell. And here the buys, meaning the shorts, have to buy to cover. The shorts have to buy to cover their shorts. The buys need to meet these sells here. Right? The covering, the short covering, has to occur where? Where there stops. So these are the stops. They will sell, they will buy, the buys match the sells, they're done, and then it goes up. Right, so we've covered one turning point. This one, I don't know what to say, it's untradeable. There's something here, but it's untradeable. This one is tradable. This one you have to use judgment for. How do I know? Selling pressure in the left-hand side, weakening, buyers coming in, all of that at a level. If there's no level, I don't know what the hell's going on. So all of that is on the test of the breakout on the 3-hour chart. Buyers come in, the ratio of buyers to sellers clearly shows buyers in control. Test this area, goes up. And let's see if there's anything else setting up. I can't even read this. It's too low. The volume right now is unreadable. All right, that's all. So I'm going to continue doing the turning point reviews. If you just follow along, you're going to see eventually you'll just pick it up and see the turning points for yourself. This is what Wyckoff was talking about when he said buying lows and selling highs. How to buy the low and sell high. Your training will not be complete unless you learn how to buy the low and sell the high. How do you buy the low and sell the high? You have to understand how turning points occur and be able to trade them. Right? The point about your training will not be complete until you learn how to buy low and sell high. That is a reference from the Wyckoff course, where he basically says when will you know that you're capable of trading, and it requires an understanding of how to trade the turning points. All right, I'm done. Thank you and have a good night. Bye.